The stock market has dropped an absolute ridiculous amount over the past few weeks, with the Dow Jones dropping over 20%. But today we're going to talk about why you shouldn't panic as an investor. How's it going, guys? Ryan here with another video, and today we're talking once again about the stock market's current situation and how it's absolutely collapsing. But we want to speak about today why as an investor you shouldn't panic and why you should stick to your key strategies. But before we get into that, please remember to like this video. It helps me out so much, guys, and subscribe for more content. With that, let's get into today's video. Now, the stock market has dropped an absolutely unfathomable amount over the past few weeks, and the Dow Jones alone dropping over 20%, which is absolutely ridiculous and sending investors, traders and economists into an absolute spin. The media is harping on about it quite a bit and causing lots of panic. But today we want to talk about why this drop has actually occurred, and as I've said previously, this is mainly due to the coronavirus and the panic that that's causing and the halt it's putting on the economy. But more importantly today, why you shouldn't panic, what we can look at and what you can do as an investor to make yourself feel a bit more safe, a bit more comfortable, and know that your money isn't at risk as much as it seems. If we look at the past, what we actually see is there have been a significant amount of drops in the stock market with regards to small dips all the way through to stock market crashes. Things like the Great Depression or the global financial crisis back in 2008. These have been large dips, especially in areas like you're looking at the Dow Jones. You can see those dips occur. But what you need to remember is these dips always recovered, even if they were extremely significant at the time, causing a lot of fear and panic, lots of people selling their shares, getting cash, while the economy seemed to be crumbling around them. But the economy always recovered, everyone came out of the recession in a better place, and what you actually see is after that period of time, there's a recovery period that can be relatively short or a longer sort of span of time, but you'll notice that every single time the stock market grows higher than the previous highest point prior to the crash. And if we take historical results as sort of a prediction of what's going to happen, even if we see a large drop now, which we are currently experiencing, from looking at the past, we can see, hey, the economy is going to recover from this to some extent, which is one of the fundamental reasons you shouldn't panic and abandon your strategy effectively, because that is the worst thing you can do. Panicking and listening to the media as opposed to sticking to your strategy, making sure you're comfortable with what's going on and you're comfortable with the shares that you're invested in is absolutely critical to your success, especially in what is now turning into a bear market. In the past, in theory, if you didn't panic sell and you had a good solid fundamental base for the shares that you're investing in and they're companies which are successful, whether they're generating profits or they were an exploration company at the time which eventually grew, you've effectively not lost any money. Yes, your money on paper has dropped for a period of time, whether that be long or short term, but all the stocks, in particular the large ones, have recovered and gone to even higher highs, with investors making large profits if they held onto this money. So that's really the main reason you shouldn't panic, because fingers crossed, but if you look at the past, this is in theory what should happen once again. Now moving on to the second point, and this is related to the coronavirus, which is effectively what has caused all this panic. Yes, the stock market was probably overcooked and it was absolutely due for a dip of some form, maybe not necessarily a crash, but it needed to go down for a period of time. But the coronavirus has driven this dip into an absolute crash, and it's dropped an unprecedented amount, and it's, as I said, driven everyone into panic. But what we're looking for now is work towards or a coronavirus vaccine. That's effectively what is going to fundamentally restore confidence in investors and the global economy in general. And the reason for this is the fact that everyone's scared. Everyone's getting their money out of the stock market, and it's not being driven by something that's truly an economic issue. Yes, the coronavirus is stopping a lot of business and trade, and yes, it is likely hurting businesses, in particular smaller businesses or countries that such as China, or companies operating and using them for their supply. Yes, it is absolutely hurting those shares, but at the end of the day, there is going to be a vaccine at some point, and that is going to restore confidence in investors as businesses will start to go back to normal and the economy will keep ticking over much as you would expect. What you need to understand here is that the coronavirus is a virus, and when you're looking at the stock market, it's not driven by monetary values, it's very much psychologically driven. So the psychology and the fear that the coronavirus has effectively generated has driven the stock market down so severely. Now, it probably, as I said before, was due for a dip, but I don't believe it would have gone down as far had the coronavirus not been an issue at this time. This moves me on to my third point, and that is, have the shares that you've invested in fundamentally changed as a result of the stock market crash that's currently occurring? More than likely not. If you've chosen shares which you've invested in for good, solid fundamentals, they've got good backing behind them, whether that be they've got a clear growth strategy, they've got plenty of news coming in the future, they've got lots of potential, they've got good income streams, that sort of thing. All that information, the reason you've invested in these companies is that being jeopardized due to the current situation. Business still needs to continue as normal, and as a result, it is unlikely that in the long term, this stock market crash will have a major impact. Businesses will continue to grow, they'll continue to kick goals, they'll continue to make money because that's what they have to do to survive. Yes, it might be a harder economic climate for them at the moment, but they've still got to keep running at the end of the day. And what every business is aiming for is larger profit margins and growth, and effectively that's what they're going to focus on. So in the long term, realistically, the stock market is going to recover because the value of companies will effectively increase over a period of time, driving the value of shares upwards. But at the same time, you've got to remember the psychological aspect that is driving this needs to change simultaneously in order to see any real recovery of the stock market overall. So as an investor, what should you be doing at this moment? Well, it's actually a beautiful time to be watching, learning, and accumulating an absolute wealth of knowledge at the moment of various stocks that you might be interested in investing in. Now, the bottom definitely hasn't come, but if you're investing in shares for a fundamental, from a fundamental point of view, you are probably pretty safe accumulating these shares now. Or if you're going forward, wait for the bottom. Wait for a confirmation of the bottom of the stock market before you start buying those shares. This is actually a real good opportunity, in particular for those people who have never invested before, to get into the stock market, because a lot of shares that have been extremely overvalued or extremely expensive normally are now a lot less value. And what you can do is effectively get into the stock market, even in those blue chip shares, for a relatively cheap price. But you want to hold back, as I said. Yes, if you're a bit more ballsy, start accumulating, but otherwise hold back. Wait for those big companies to settle a bit, the fluctuations of the overall economy and the stock market to simmer down to a point where you can see that it's sort of stabilized and could potentially be starting to grow. That's when you want to strike. That's when you want to buy shares, because that's when you're going to get the most value out of your investment, because effectively, in theory, if you've chosen those shares with the good fundamentals and with the good growth strategies, they should only increase in value from there. If you want to take a bit more of a risk, you could be looking at smaller companies which are relatively new to their industries. But what you want to be looking for is, once again, still those good fundamentals. So for instance, if you're looking at a mineral company, for instance, you want to make sure they've got good grades, they've got a good management team, they've got a large resource, those sort of things. You want to be looking for those companies because at the moment they are going to be extremely cheap as the stocks across the board have dropped in value. So these ones are absolute bargains at the moment, but you've got to make sure you're not investing in a dud. You need to make sure that you're investing in something with those solid fundamentals in place. And that could potentially, for some people, generate life-changing results and profits if these companies do eventually grow into something significantly bigger. And I'm going to leave you with that today, guys. I really hope you enjoyed the video. If you did, please remember to leave a like, and any comments, questions or queries, or even your thoughts on what's currently going on down in the comments section below. Remember to subscribe for more content and to follow me on Twitter. The link's down in the description below to stay updated with everything that's currently going on with regards to what I'm looking at, what I'm investing in, those sort of things. And with that, guys, I hope you have an awesome day. See you next time.